Hey everybody, it is Brian Shannon from AlphaTrends.net speaking. Today is Friday, the 23rd of August, 2013, and let's take a look at these markets. We'll start with the numbers. For the week, the S&P 500 did gain about a half of a percentage point. NASDAQ up triple that, up 1.5%. Russell 2000 was up about the same amount. Semis and the financials were up as well. So we had generally a positive week here for the equities markets, and the S&P 500 did get back above this rising 50-day moving average after closing below it 4 days in a row. We started out the week continuing with some selling from last week, and that spilled into Wednesday. But what we saw happen here was that the potential for a bullish scenario that we spoke about on Wednesday was that this market getting back above 166.15-ish would be bullish for the market, that we would start to look at the upside with the eye towards it rallying up perhaps towards this prior level where it broke down from at 168 to 168.5. So we do have near-term strength in the S&P 500. You can see that we are back above a rising 5-day moving average. And next week, it would be good to see that this level holds as support in about 166. I think that down towards about 165.75 to 166, that's what we really want to see hold as support next week. If it can continue to stay up above that level, then it looks like the market should be in for at least a test of that 168 to 168.5 level. So what we were keeping an eye on as well was the volume weighted average price since the June low, and you can see we broke below that earlier in the week, and that level acted as resistance, but we're back above it today, and that adds a little bit further significance to the level of 166 because it is the volume weighted average price since that low there, and we were looking at this Fibonacci off of that low as well to the recent high, and we've been kind of floating around that 38.2% retracement, and again it adds further significance that we do have the 50-day moving average there. So if you bought at the 50-day moving average, you had to wait 4 days that were really pretty uncertain looking with the market below declining 5-day moving average to break even and start making some money. Now we do have a higher high on the short-term time frame. This is 10 minutes of data. I'm sorry, 10 days of 10-minute data. So each one of these candles is 10 minutes. This 5-day moving average is the same as what we see in the 30-minute time frame. That is each candle showing 30 minutes, but we have a different period to get that 5-day moving average. And here it is a 65-period moving average, whereas on the 10-minute time frame, it's 195 of these 10-minute time frames, which equals the 5-day moving average. There's an article about that under favorite post at alphatrends.net if that's not clear. So we want to see that this market holds this level holds support at about 166, but we still have to be near-term cautious and think that it has the possibility of finding resistance up near about 168 to 168.5. Only price pays, and right now it's saying the intermediate term trend is higher, the longer term trend is higher, but we have potential for resistance up in here. Just like the last time we saw a significant sell-off, we looked at this as a potential level of resistance, and we're actually considering getting short here if it broke down below support. We never did initiate a short there. If it had occurred that this prior support in here had been resistance, it would have followed a script something similar to this, I think, and now we have that potential scenario that 168 to 168.5 could become resistance again for the SPY. But for now, let's be cautiously optimistic and think that the market has the opportunity to make it up towards that level at least, and perhaps do even better than what people are expecting the market to do once again. The weekly chart, we're still in a clear uptrend here. We take a look, we can draw a trend line off of the lows of last November, and this was a possible scenario, I thought, that if we did continue to break down this week. And again, we have to look at the market in terms of scenarios, and if it got back above 166, then we would become bullish. Otherwise, we had a negative bias towards that market. So you have to listen to the message of the market and change your tune as the market tells you to. You have to be prepared for whatever the market is going to give you, not for what you want to happen. The NASDAQ did have, again, about a 1.5% rally this week, up 1.56%. And you can see here that the key level for this market was that 76 to 76.15 level. This had been prior support. which turned into resistance, and we finally got back above that here this morning with the gap higher. So there wasn't a lot you could actually do with it. You would have had to really been long from Thursday afternoon to take advantage of it. But the fact is, we do have this higher high, and we now will be looking for 76 to become a level of support. What I was thinking was a potential scenario in here was that we would kind of do something like this, break this bigger area in here, and then it appeared that perhaps 74, where we had prior support, and that 50-day moving average would be tested. Of course, it got back above that 76.15 level, and the bearish scenario did not play out. I think a lot of people probably got squeezed on this, which is why it held up so well. But the fact is, the daily time frame is still in a confirmed uptrend here with higher highs and higher lows. This is just looking like another pullback, and something that's going to frustrate a lot of short sellers. Eventually, the top will be found. For now, it doesn't look like it is, but we want to do what we always do, which is manage risk and be aware of the key levels. And for next week, if we can maintain above the rising 5-day moving average and the 76 level, then we'll give the benefit of the doubt to the buyers still. Now, the Russell 2000 is somewhat interesting here. Well, it's always interesting, but the fact is we had this 103 to 103.50 level. Let's take a look at it on the 65-minute time frame. And here I've got basically a 10, 20, and 50, I'm sorry, 5, 10, and 20-day moving average. Anyways, this 103 to 103.50 had been an important level of support for this market. It gapped down about a week and a half ago, and we did see a little bit further selling, but now we're rallying back up to it. So it's going to be interesting to see if this prior band of support does in fact become resistance. It's interesting to know as well that we were talking about the head and shoulders pattern with the height up here of about 105.5 and the neckline at 103. So that was 2.5 points. When it broke the neckline of 103, we would take the 2.5 points and subtract it from 103 for a measured move price objective of $100.50. The low this week was actually 159 cents. So kind of interesting that it worked out so well in that area. But what we have to do is not look back, but look forward and say, what are the potential scenarios here? One scenario is kind of similar back to what we were looking at back in June, which was the scenario of it broke down, it rallied up. Was this going to be, this prior support, going to be resistance and turn the market lower? Well, that's where we are right now as well. Will this prior support act as resistance and turn this market and the sellers come back in and take control of this market? Because if they do, then we've got to look at trend lines, something similar to this, which should take it down below $100 a share, and obviously that would do a lot of damage to a lot of people. So the key for next week, I believe, is to hold up really about 102 to 102 and a quarter. That's where we saw a little bit of resistance this week. So if we can hold that as support, then perhaps this market can chip away at the selling that may be present at that 103 to 103.5 level, and it can continue higher. It gets harder and harder to believe that each one of these rallies is going to continue to recover and move higher again. At least for me, it does. Some people, their confidence grows. But when you have a market that's been rallying for as strong and as long as this one has, you start to think, well, perhaps we're due for a deeper pullback. So we want to be aware of all the scenarios and say, here we are right now in a potential area of resistance, so we want to go slow. We've got the semiconductors, which are still below a key level of prior support, and that's that 38 to 38.10 level. Let's take a look at the daily time frame. So you can see that we had seen the pressure building with these lower highs, and then it broke down, and it's still below that 38 to 38.10 level, and that is kind of a warning sign for the rest of the market. I don't think it means run out and sell everything. Of course, it doesn't mean that, and I hope no one would interpret it that way. We did find some support at that trend line off the November lows from 2012, and it's attempting to stabilize here, but it has this bigger prior support area, which has the potential now to turn into resistance. And this market did, stay below that band of prior support for the entire week. So this is going to be the key to the semiconductors next week. If the semiconductors break down further, well, then I think you have to look at the rest of the market with a little bit closer level of suspicion and distrust, I guess, would be the right word there. But the financials, they're stuck kind of, they closed the week right at that 50-day moving average. 50-day moving average is $20.10. We saw a close of 20.06, and we've been talking about, if we look at the 65-minute time frame, and again, you might be wondering why I'm using a 65-minute time frame instead of a hourly chart, and there's a post on Alpha Trends there as well under the favorite post about why you shouldn't use 60-minute time frames, basically because the market is open for 7 periods basically of 30 minutes each day, so it's open 6.5 hours, 9:30 to 10, 10 to 10:30, 10:30 to 11, etc. There's 7 even amounts. If we round it off to 65 minutes, there are 6 time periods, equal time periods each day of 65 minutes. That way, each candle gets what am I trying to say here? The same percentage of weighting into a moving average. So, anyways, look at that article under favorite post at Alpha Trends, where I go through these charts and analysis every single day for subscribers. So, and have a chat room as well. But what we're looking at for the financials is that we really need to see it get back above about $20.40 for this market to consider that we're kind of out of the woods and that it's not going to turn into something deeper, this prior support. It did it before. It did it over here, that this prior support, I had a bias that I thought was going to turn lower from there. I didn't trade that bias. It was more of be aware of the level that it has the potential to become resistance. That's where we are once again. Be aware that this level has the potential to turn into resistance. And if it does turn into resistance and this market breaks from there, well then I think we're probably likely to experience a deeper sell-off, perhaps down to $19 a share in the financial stocks. The bonds recovered a little bit this week. They have been obviously in a severe downtrend really since May. That has not been good for the cost of money. Obviously, bonds go down, the price of money goes up, the yield that is. Gold has been recovering. I still, I just don't like gold basically, but it's bounced from about the 2/3 retracement level. I consider it still in a longer-term downtrend, guilty till proven innocent. If we look at Apple had a decent week, I think, because it consolidated. You look at the volume-weighted average price for the week, about 505, and what we're seeing right now is some support basically between 498 up to 505 as resistance. And the Apple's had a great rally here off of these lows, and then when of course the earnings came out, we've seen a real nice rally. So we've seen a couple of thrusts higher in here, and perhaps it's time for this market to pause a little bit. We'll see, but Apple is still looking generally bullish here on the daily time frame. I would prefer to see Apple pull back and test this prior resistance and come down towards the 200-day moving average. But the market doesn't care what I prefer, what I want or think. So we have to look at objective price analysis and say that even when they shut this market down due to glitches of whatever kind that haven't been fully revealed for 4 hours, that at the end of the day, did it really make a difference in terms of price action? And stocks opened orderly after that closure. So it really amounted to a lot of noise once again. Only price pays. There wasn't a lot of volatility after it, after the markets, the stocks opened back up. So it's largely noise. If you're trading based on price, then it didn't really affect you. And price is the only thing, again, that pays us. So that's what we pay attention to. And that's what I do at Alpha Trends every single day for subscribers. So if you're interested, take a look at that and take a free trial to it. And hope everybody had a good week, and wish you a peaceful weekend. And I'll talk to you next week. Thanks.